First account blown, 100k funded evaluation out the way. Alpha Capital Group. Time has come where a few losses have been endured. I've actually paid the price of a few mistakes. And it's good because it's the summer months, volume's a little bit slower. And sometimes you can make trades up in your head that don't exist. So this one's going to be a very educational one. Because, yeah, just because I've passed funded accounts doesn't mean I won't fail them. Yep, this is the first 100k I've failed, right? But there could be more that I failed down the line. But I've always said I want to pass them or fail them quickly. I've been unable to pass these phase 2s quickly, though. So this week, just 2 losses just cost me. We go back to last week when I didn't get tagged into GU, if you remember. That was 3R trade. FTMR, I caught that. I didn't manage to catch that on these. And it's just cost me. My funded phase 2 here is down 4 trades in a row. So it's not looking the best. I'm going to go for 3 trades left. I should have 1.2% risk on each one of these. Try and claw that back. And then we've got funded, which is down 1%. So I risk 0.5%. So I'm down 1%, 2R from this week. And the payout would be due next Thursday. So I might not catch a trade and maybe miss a payout. And that is, again, the reality of being a funded trader. You don't always get your payouts on the due date. And then the evaluation here. Last phase 1 that's already been paid for. We'll be starting that whenever the next trade comes in. So we go again. There's nothing wrong with failing an account. Some people take it more seriously than others, but I don't see it to be a massive problem. If we go into my FTMO, I've took the same trades on every single account. I'm down 2.5% on FTMO because I caught that GU trade last week. And I'm down 3.5% on the challenge. But we're looking alright on FTMO. It's not too shabby. I can deal with that. Obviously not nice from nearly passing this the other day, last week. But let's go through the week. And what did I do wrong this week? I tried to play counter trend trades and multiple of them. And it's just really hurt me. And yep, I've gone back through already this week and gone, where have I gone wrong? I've gone back through my data collected on counter trades. And I'm starting to realise that the trades I took this week weren't aligning with that. But it's always good to go back through the week. So let's go back to DXY. You know the drill. We know we go through the analysis, everything there to start the week. But yeah, it's not been easy. The last month, I would say, trading this way, for me, hasn't yielded the most profitability. I'm only up about I think a couple of R over the last month. If you look from this time last month to now, a lot of my profit was made early on in June. So over the next 2 months, I'm going to be very careful and selective with my trades because I've realised that fundamentals are realistically driving the market at the minute more than the technicals. Some months are a little bit slower. I wouldn't put that past anyone to not trade it. I would just say be careful with the moves that you do take. We go to DXY, we can see clearly with every little bit of analysis we would like to mark in. I'd like to see price realistically now come down to 104. If we're failing within this wick, we know that we're now starting to see this lower structure form. At the same time, it's a little bit difficult because you also see in this form. So we're starting to create a channel. But for the minute, I'd rather look at this and say, okay, we're probably now going to try and take out this lower liquidity point. I think that makes much more sense than always talking about 104. I think that's the high that we've tried to make. If we are going to go down, we need to start seeing that low break. And that kind of counters the idea of us coming back up into this weekly area again. Trying to tap half of it or anything. So you can see that it's been a rocky one over the last few weeks. I would say overall, really, from maybe the end of April, it's been a bit of a range. So we haven't really seen too much price decisiveness over that period. What we can gauge, though, is that more than likely, this is probably going to be an order block. So I'll probably mark that in now. It's a bit more recent. If we go on to the daily time frame, we can see that we've trended down. So it's very hard to try and sell to start the week. We're in a position that, okay, we're in this very big fair value gap. I really don't like this that much, this fair value gap. I'm going to put it to the left, keep out of the way. But the idea was to finally come down to this. But I would rather, to start this week, see a pullback. We have a few areas to come into. We've got this fair value gap. So we know that that's probably the best area. If we can get a pullback into this, sells down, just perfect. You've got a low to retest. Keeping it simple. Obviously, you got, don't really like that as an order block because of the gaps. So I'm going to say this area would be the key area to sell from. And with buys, you've got to be very careful. I feel like looking back now in the week, when you're trying to play counter against a strong candle in the opposite direction, you need a very good cause as you go down the time frame to take that trade. But let's go on to EU, because realistically I'm looking for a pullback and sells on DXY. It doesn't really get much easier than that. I think it's quite clear what we're doing. If we go to EU. Now EU, I don't really feel like the last few months I've managed to catch many trades on it. I feel like GU's been a much better pair to trade. But I do like EU at different times, and I have a little laugh with Ruben. And I always say, look, sometimes I love EU, sometimes I love GU. It just depends, and I'll go through phases. But definitely GU the last few months has been a beauty to trade, no doubt about that. The trend has been so clear. As we go on to EU for the week though, we can see similar. It looks exactly the opposite to DXY. Looking back, there was French elections. French elections gapped up. We filled the gap and we continued up. I think looking back at the EU sales last week, I would say even more now I feel worse about them. They were awful, because when you've gapped up like that and it's positive, the euro is going to be so strong, and you can just see it. Once it retested that gap, the buys were on, and I've been looking for catching out on sells, just getting rinsed. And yeah, I would say very strong push up. Okay, very high again. I would say this is a decent area to be taken out, this wick high. On the weekly, in terms of the areas, we are very close coming up into an order block / wick. I quite like the order block. The wick is there. I mean, it has been tapped, but that's mostly the next obstacle. So I want to see price coming up into this. Once we do, maybe we're going to pull back. Again, we've got the gap that the DXY has, so it's correlating. Always would say, would probably rather see price not take this out, come down, and then we can hit that out. If we come up first, yeah, that could be still fine. We could still continue up, but I'd rather that not be taken yet. And then, of course, that is really the plays that I'm looking for. So I did set higher time frame positions somewhere around here. I think that I had a position within this wick as well, because I like the fact that it took out and filled that gap there. If we're looking at positions, then I had a high position and a low position. These have not anywhere near been tapped looking back now. But I always set them up on the higher time frames anyway, just in case. I think I've got in a half of this daily, and we're looking at around this play to the high. And then I'm same thing again with the lower area, somewhere below that wick, covering that daily wick, maybe looking at about, yeah, 30-ish pips. So they're both decent trades. Obviously, they haven't come in. But that's the kind of setup I'll be looking for to test the high that we're currently looking to form. Again, would I want to try and buy to get up to there? Well, not really, because I think it was clear as day that that bullish candle gave you the option for buys. You had a hide there to test. Now we're kind of through that. I would rather wait to see a pullback. And then with the EU, GUs with GU here. I thought I was already on GU. GU was probably even more bullish than EU. A very strong bullish candle. And this is going to be a frustrating one to go back and review. Because realistically, if this is the weekly fair value gap, well, let's mark this in. Let's see how weak these candle bodies were coming down. No decisiveness. The decisiveness was in this bull leg up. And then, of course, we then failed at this weekly 50% 3 times and then continued bullish. If we go back onto the daily now, what I can kind of gather is if, okay, we were trending down, which is all fine and good. We then took out this high. We've been trending pretty clean. This pullback is very slow. People call it the law of effort. It basically means if your pullback takes longer than the leg up, for example, this one, it shows good momentum in the direction you want to go. And you can kind of gauge that this isn't going to continue for ages. Yep, we had a good leg up here. We started to show weakness. That's why we had a pullback. But the pullback wasn't anything spectacular. But if we look on GU here, from that weekly 3 taps onto the daily time frame, we know we've got this high to take out, which is just below the current yearly high. Such a key level there. Make that current yearly. We're now looking at this area being important to tap as a target. And it was a magnet for price, really. Again, looking back, we shouldn't really be worrying about deeper pullbacks until we take that out, I guess. So now I'd be looking at Okay, we're showing good momentum to the upside, short and choppy pullback. Now we're showing decisiveness and leg for push up again. We're expecting this high to be taken without really pulling back significantly. So again, I've got that just dead wrong again this week. And if we mark this up as a daily, we can see that at the minute there's nothing to the left that price is failing at. We should just be able to continue up. So if we start the week on the Monday, I'm going to sit out and wait. I want to see price do something. So we gapped up and we closed bullish. EU gapped up, closed bullish. It's still a decent body close. Quite a confusing one again. These gaps have threw me off massively. It has not been easy. I don't trade gaps on Owanda, so when Owanda gaps, you know something's happened. Whereas GU done the same. I don't think I really mentioned about this key level here. 128. We closed above it for the week, and then we've gapped below it to start the week. That's completely shifted my analysis to being prices still failed to break 128. So I've deemed that a significance. Not only that, I've also deemed the significance to be this candle's closed weak on a Monday, and I've gone, oh, I'm going to play a counter trade. Okay, what is good about counter trades? From what I know, if you're playing a counter trade from a daily confirmation or a weak bullish candle like this to play a sell, I normally need a liquidity point, a daily liquidity point that makes sense. Current weekly low, previous weekly low, a previous day in the week that broke a low. So if this candle here was to break that low, that's Tuesday, that's Wednesday, we fail. Well, I know Thursday more than likely or Friday we need to come and take one of these lows out because that has tried to break a low and failed to the upside. With this trade, I don't see any area as a point of liquidity apart from the current weekly low, which is right here, literally right here. I've looked for a sell on this day. Not only that, again, looking left, I spoke about this in the last week, I think. Where's the obstacle on the daily that this has failed at? Nowhere. I'm using a key level. Okay, a key level is key level. It's not a POI. So I think, again, I've been caught out thinking that we're having issues. This wick, I don't like that as an unmitigated wick. I hate it when it's the first candle usually. So again, putting too much emphasis on a key level. So I've looked at EU and I've gone, I don't want to trade EU. This is still a bullish close. DXY is closing bullish. GU is still closing bullish. It's not correlating to DXY exactly, but it's not against it. So I think there's a key thing that I've looked for a sell. If we were to look at how GU sets up on the next day, we're going to go for a medium time frame play using Asian range. We've marked up a leg and decided on taking a move within here. So we've got 2 1 hours. I've gone for the top one. So when I look at areas of price for it to be a target at, I would start off by assuming, okay, what is the obstacles in the way on the daily time frame? Always harder when it's counter because you're selling back into gaps you've just formed. So if you're to look at this coming into this day, yeah, okay, price tapped my entry and dropped, but as I said, current weekly low was the main area to target if you're going to take a trade, and that was just too close. Then you've got this daily fair value gap you just formed, risky because you're selling into that without a liquidity point. Yeah, what about this as being a liquidity point? So what, you're telling me price is going to move 200 and something pips to take this low out when you've just seen a very strong confirmation for upside on GU? It's just not going to happen, and that's where you've got to be realistic and say that's not the point at which we're going to fall to. So mistake was made, and looking back, now talking about it now, feels stupid. It's the first time I go through it, and it's me actually giving my live reaction to how stupid my trades are sometimes. And we all do it. I don't think anyone is perfect that takes amazing trades all the time, and that's a hard one to swallow because I always say it. Why do I trade a play? Because we're failing at a certain level. If we're going to play a counter trade, we need to have an area that price will fall to, and also a price that we're failing at. Neither of these have happened in this scenario, so yeah, I am going to feel stupid. I went to target the daily fill because at previous times when we're playing moves down here, we were playing to the fill. Difference between this and this is we're playing to daily fills here just in case because we're not sure on the trend change. with this scenario, we're not even in the trend. This is still bullish trend. We're making higher highs and higher lows. We're moving up. This is not. This is just bullish. And I'm trying to play a top. That's dangerous. And when we get this close here, we can see the entry. To be fair, it come in nice. And it's always a beautiful thing when price comes in and taps you in. So the 1 hour leg there is what I'm trading off. And obviously, I got quite close to TP as well. And this is why the last few weeks have been annoying. I've had a few trades very close to TP, not hit. But yeah, looking at the next day, I've then decided on taking another GU trade. So if we go onto the weekly time frame, now on EU, we can see that we are very bullish still. But this Tuesday closes bearish. Now my assumption is there is no gaps or anything here. We can pull back to this daily fair value gap. Then again, my question would be, okay, what are we failing at? Oh yeah, okay, we've got this. We are actually failing within this daily gap. It's very big though. 50% of it has failed twice. On Monday, we opened below it, and then Tuesday's failed at it. But where's the rejection wick on the Tuesday? This is a future order block with a wick both sides similar size. No engulfing candle on the Tuesday. So in my head, I've seen this as a bearish confirmation when it isn't. So I did look for a sell yesterday. Got very lucky. I didn't get tagged in actually. I'm going to go through that in a sec. But as we could see the DXY, it closed there on Tuesday and did not break the gap that we had marked in there. The fair value gap we just formed. We closed at it. Another reason not to really look for another trade on a Wednesday, which was yesterday. GU. And obviously I'm in a trade now, so I'm starting to think of stacking positions. And if we look at this confirmation on the Tuesday, we're trying to sell into a gap. We're not rejecting anything to the left. And I've gone for another sell. So yeah, looking back, just making up trades in my head that don't exist. And that's different pressure than I've had before. It's because you may not realise it until you hit a point and you go, this is maybe down to the fact that, no, I do have the potential to make some money. There is potential for profit to be made and withdrawals to be had. Now the game starts to change and you start to play tricks on your own mind. Everyone does it who initially probably gets funded and tries to assume that they're going to get a payout. And I'm in no rush to get payouts, by the way. But as a trader, you still want to get payouts at some stage. You still want to accumulate positive gains into your account. But yeah, this was another trade I've looked at on the next day. We're going to go and look at marking another fib, which we've done. We've done it here. We've got a leg here. And I've just got in off the 1 hour order block. So it's alright. You can look at this and go, yeah, this looks decent. But it wasn't that good in the way that this is just short pullbacks. It's very choppy. It's not really moving much. And obviously got caught out in the end. We got in around there. Stops weren't even that big. Stops were only about 15. So if we look at these two trades that ran into yesterday morning, got tagged in and then got taken out. There was pound news. There was a speech about Bank of England. Pill was talking and took me out. But I don't blame that on fundamentals. I'm not going to be stupid and go, that was down to the fundamentals, because that's down to me. That was down to two poor decisions, looking back now. And reflecting upon why counter trades sometimes aren't that good when you have no liquidity points to play to, or at least failing to the left at a certain area. EU potentially was a little bit easier to take yesterday on the basis that there was that 50% daily we're failing at. There's no gap to down here. Got higher time frame positions set. Looking for that pullback. It's another thing though. Another thing that I've caught myself out on this week is if you do trade multiple time frames and you've got these higher time frame positions set, don't assume price is going to run to these levels. Doesn't have to. It will fail at any point that it wants. That can just mean that you're trying to play a sell down to here. It may not even come down to there. You are getting way ahead of yourself thinking that price will run into these deeper areas when there's no confirmation. And that is something I've been quiet in before. But before I've won trades. This time I haven't. And this is where I've had to learn. And EU there, if we're going to look at what we're doing here going into Wednesday, why there was no good option even though I've looked for a sell. Let's be real. Where did we open the week? We opened the week here. Okay. We're still at the start of the week within the low to high, which would be here. this low to this high. We've opened, we've obviously held above Friday's low. We then took out on Monday the highs, and we're now in this leg. But what I'd say about this leg is it's so choppy. There's no clear, obvious buys at the minute, just so high up from what happened last week. And then it's about catching sells. Well, if you're going to catch sells, realistically, I'd want this low to be taken out. That's the low of our leg to come up. And we hadn't seen that yet. We've seen a few changes and breaks of structure here as we start to change on the lower time frames. But I say it again, when we look at the law of effort, or we're looking at something that shows this and then this does not signify an easy trade to sell on, because even though you're high, you are seeing staggered price action. When you want to be getting into a sell is when you're doing that and you start to stagger up, and then you know that you're going to get your quick move down, which hasn't been the case in this scenario. Again, we've not took out this low. We're staggering down. We're not having any real oomph in our legs, and I've ended up looking for a sell on this day. Difficult day in regards to, there wasn't really any POIs, and I think that was just more staggering up that this wasn't a good day on EU to trade. But if we're going to go to the POIs that I looked at, I had an equal high set up here within the leg that we were in. We can see that this was the leg. So this was the leg we were in. You can see that we've obviously got a high to low. The reason why this is the leg is because we formed a lower high here and that got taken out, and then we formed a new one, and then we've made a low. We haven't actually took out this low though. So sometimes I will take a trade in a different leg. If we're in a bullish leg, I'm assuming that the leg will change, but I don't think this was a scenario that it was to say that. And then we're going to look at why I've then looked at pushing my entry higher. Within this leg, I see equal highs and four key liquidity wicks. I don't want to use this leg if we're going to potentially sweep these wicks and come down. My stop loss isn't safe. So I've looked at just saying, okay, this is better. This is a better leg. Feel more comfortable like this. And we're going to go for an entry off the liquidity, because that looks better than the equal highs there when it's all staggered in. More than likely to take that out. Stop loss was going above this gap, I'm pretty sure. Or we're going above the high. Let's have a look at the POIs in here. Yeah, the stop loss didn't need to be massive. And we're looking to play. This is, again, where's the targets? This is the daily area down here. It's just not any key area. There's no liquidity to say that we're going to come down to that. And yeah, this is where I am fairly new to liquidity, but I understand it. I know that sometimes using POIs and price action, it's just not clear enough. Liquidity is key. That's what drives the market. When you're getting counter plays and you're in trend, you're going to get clearer options, because when you see a liquidity point and you're trending, so you may leave this, and then we start failing to take out this high. You know that's a liquidity point. You should take it out fairly quickly. You shouldn't be taking ages to take that out, because price will use that and grab to continue the bull run. If we then look at this day, I've then set the liquidity as the overall entry, and I take my limits off at 5 o'clock in the afternoon, and you can see how close that's come. That would have tagged me in otherwise, and you can see there limits are now taken off for the day. Later on in the day, price tags me in, and there you go. It would have been a loss because this leg's been taken out and everything. Got blessed there and got a scapegoat. I said it last week or the week before. I've had a few of them, and that's where now I seriously need to know that work needs to be put in on these, because I can't have 5 losses in a week. That will damage me, and that's going to happen at some stage if I don't butt my deer up and take good entries. So the high time frames have been nowhere near been hit. Like, we've already literally took out this liquidity point on EU, on GU. We took out the liquidity point. We're coming for the current yearly high. There's no buys now. We're just too high. There's the move down here that we've missed for buys. And reflect on the week and just go again. You can see what DXY ended up doing. Never broke that gap. We've just continued down. We're coming to test the lows. I don't want to look for a trade today. We've got CPI in a matter of a few hours. So this could be a completely different analysis by the end of the week. We could see crazy moves in the next couple of hours, and we may end up looking like these pairs want to pull back on the dollars and want to pull back to better areas for buys. But at the minute, they're looking very bullish. It's likely that we're going to see a lower CPI print for the USD, and it's going to make DXY just drop even more. So 104 is in sight now. And I think that looking back on the week, we've had very strong confirmations. There's no fundamentals changing to say that we're going to end up seeing a reverse of that, especially coming to CPI week. We're just not going to see the pullbacks we want. And the pullbacks are quite big and ambitious to pull back into here. And obviously, I'm not interested in buying if we're going to just pull back into that. That's not for me to catch. But yeah, expecting that was quite a lot. Trying to play sells without a liquidity point cost me. But at least I can be honest with myself and I know where I've gone wrong and I'll work on it. There's traits that you need to have as a trader, and it's not unlucky. It's not fundamentals. Sometimes you get wicked out with news and it runs by a pip. Yeah, you might get unlucky. But in this scenario, and many other scenarios that I've spoken about my losses in, they're all down to me. And this was a trade I look back on, both trades on GU, and say that they're not going on my data sheet. They're not good enough. And if they're not going to go into your data sheet for your overall year, you've got to learn why that trade wasn't good, and you've got to go back again. Into next week, don't make the same error. But here we go. Let's see if we can at least take our time this month and claw back some drawdown. That's all I want to do. It's going to take one good trade to get another payout. It only 2R. It's not the end of the world. And I can just trade a new account in phase 1. And I'll be going again with 4 accounts on the go. We'll see if we can revive them. But this is the real grittiness of trading now. How can I bounce back? How can I make sure my trades are good now? Because the more in drawdown you get, the more likely you are to make bad trades. It's a negative cycle that I don't want to be repeating. So I'll be very, very decisive now of what I want to take. And we'll see how we can finish July. So July at the minute, if anyone's wondering, I'm down 0.75%. So I talk about all this mistakes and losses and stuff. You know what I mean? I'm not even down. I could do a one-to-one trade and win it. I'll be back in profit. I don't do one-to-ones, but there's an example of, yeah, you might look and think, oh, what a bad week. I've ruined it. No, you haven't. You've had one bad week. You had a good week last week. So now you've got to balance it out and find another good week in there. And even if I have one more good week and one more bad week this month, there will be profit. And if that profit is 1 to 2%, that is all I need, as long as I can keep repeating that. But we're in grind mode where challenges are needing to get past to make some good money. And we're in the thick of it. I love it. I'll look back on this time as a great, great basis for where we're going to head with all this stuff. And yeah, I recommend for any of you guys that are going crazy in these summer months, definitely calm it down a bit. It's not always about catching loads of trades during this time. It's about maybe having a holiday, taking a break from trading. I'll be going away next month for a few days. I'm not going to be off the market. Of course I'm not, but I'm going to still be there and relaxing outside of the hours that I do trade. But yeah, let's go back again next week and let's smash it. See you later, guys. Take care.